So today it's my great pleasure and honor to welcome Naren Gupta, co-founder of Nexus Venture Partners, an absolute veteran in our industry. Naren, a very warm welcome to you, and it's great to have you comment and share your perspective, insights, and vision for where we are going in the cloud industry in particular, but we can, once we have talked about that, we can talk more generally also in where you're seeing the entrepreneurship industry going for us in the technology business. So welcome. Naren, I want to tell you one story before we start the discussion and ask you questions. One of your portfolio companies was actually the impetus behind us starting these online roundtables, and that was DimDim. So, DimDim was one of the case studies that we did, and I think it was way back in 2007 or 2008 as part of the Entrepreneur Journey series, and I met Didi Ganguly, an entrepreneur, and that was just around the time when my first Entrepreneur Journeys book was coming out, and he said, hey, let's kind of have you do a book launch event over DimDim. So that kind of turned into these online mentoring roundtables, and if you look at our first series, and I don't remember how many, maybe first probably 30, 50 of these roundtables were held on DimDim. So definitely there's a great memory and a great acknowledgement there. So tell us what your thoughts are on where you are investing these days in terms of cloud. What have been some of the interesting case studies, and what is your investment thesis around the cloud today?
Thank you, Shramana. It's really a pleasure and an honor to be here with you. Before I answer your question, I want to say, what you have done with 1 million by 1 million is really remarkable. And giving people the courage to start companies without raising financing, bootstrapping, I really believe is the way to go if you can do it. And one of my biggest concerns in the venture business right now is that the ownership stakes of founders are going down too quickly because they raise the funding very early, and I don't think it does good for us as investors, and certainly is not the right thing for the founders. We want the founders to do well, and that's how we will do well as well. And Maureen, thank you for all the your coordination. It has been so perfect, so easy for me to participate in this event, and it's really been a remarkably easy thing to be able to join you today. Now I'll go back to actually DimDim. The Didi is a fantastic person, and that's something we always think about. And I think we like Didi and other entrepreneurs because they can see around corners. There are a lot of people, cloud is a common term today, but 6 years ago, actually it was 2007 when we funded Didi, and he talked with you around that time as well. Cloud was not a common word in the technology space. So for people who are able to see around corners and see what the future might be like, actually that is the kind of a thing which allows them to create new companies and also bootstrap the companies. Didi, by the way, bootstrapped the company, as you know, for almost a year. And that really worked out very well for him because he didn't have to raise a lot of funding, and when we sold the company, he and his co-founders had a significant stake in the company. So I really want to encourage all entrepreneurs to take the plunge, take the company to a certain stage if you can. If you can't, then you should raise funding. But if you can, please do that because it's good for us and it's good for you as well.
You're definitely using the philosophy bootstrap first, raise money later. We have nothing against raising money, but bootstrapping first, as Naren is highlighting, is really critical to preserve ownership, and especially the amount of money that is being raised today, especially in these cloud businesses, is crazy. So by the time you raise that much money, gosh, the dilution is crazy.
Absolutely, and I think one thing it does for you is it makes you frugal. And I really believe that all great entrepreneurs are extremely frugal. It doesn't mean you don't spend the money to build your business, but you spend the money only when there is payoff, and you only spend that much amount of money that's necessary to get to your results. So I'm a big fan of it. I started the company many years ago, and I bootstrapped it for a number of years, and it worked out great. Now, I'm going to go back to the question you asked in the cloud space. So if you look at 5 years ago, 6 years ago, when the cloud journey, let's say, began, the focus was on the infrastructure. We funded a company, co-led funding in a company called Cloud.com, one of the earliest companies in the cloud space after DimDim. DimDim was really the first company we funded in the cloud space. And then, but today, the opportunities are very broad-based. The infrastructure issue still has not been resolved. As many of you know, OpenStack is becoming quite popular to build cloud infrastructure. And even beyond the infrastructure, there is opportunities in the middleware, ability to write applications and distribute them. There's a whole lot of new areas we are looking at in terms of how to secure our cloud applications. Going back to the infrastructure, the focus more and more is on flexibility in being able to increase capacity on the fly, being able to control large cloud infrastructures effectively. That is sort of leading to things like software-driven storage, software-driven networking, and ultimately software-driven data centers. And with all of that come, additional issues. JBoss and things like that were good application servers in the old days, but we now need a whole new class of both databases and servers. So I would say, there are opportunities across the board in the cloud. I would also say that cloud is enabling a whole new kinds of applications, things like big data. Big data would not have been possible, big data applications and technologies, without the cloud. So think of cloud both as something that needs to be worked on, but even more importantly, an enabler of new applications. The things we are doing in the mobile space, which obviously are distributed applications, they also would not be possible without a cloud infrastructure. Uber is one of the biggest consumer cloud applications. That I don't think would be possible unless you had an infrastructure that was both distributed, flexible, and easy to access. So I would say I want to hear from entrepreneurs what they are thinking about because they have the best ideas. But I would say that your imagination is your only limit.
So a couple of questions. We have actually had two of your portfolio companies besides DimDim as entrepreneur journeys case studies that are very inspiring case studies. One of them is Dhruva. And I think I have mentioned this to you, India is our second largest geography outside of the United States for 1 million by 1 million. We have had very good adoption, and the entrepreneurs seem to like us. So Dhruva is a flagship company for the Indian industry. And for those of you who are listening, as the Indian industry came out of a services background. And then in the last 10 years maybe, but more probably in the last 6-7 years, there is more of a product industry developing in India. And there have been a lot of people putting in a lot of work to make that happen. We have done our share of this work. And one of the companies that have emerged out of that is Dhruva. And it started off in India and has since moved to a San Francisco headquarter global customer base kind of model. Talk a little bit about this particular company and what what your thoughts are about the model of Indian companies starting in India and then building these global footprint businesses.
Yeah, so Dhruva is a very, very interesting case study. They started about 5-6 years back in India. And the first thing they did, which I tell everybody company to think about, is build a good product. That is absolutely the key to everything. And without marketing, they had customers in about 20 countries, more than 20 countries, when they were based in India. We invested in the company about 3 years back. Again, the model where they can bootstrap, raise a small amount of money early on, and then use our funding for marketing and expansion. When we funded them, the goal was to create a global platform. And that's what they have been able to do. The thing I would sort of take a step about Dhruva is that Gartner did a study on endpoint data protection, which is where Dhruva is. And in all 10 categories for the last 3 years, they have been rated better than anybody else. So you've got to have a good product. Now, why could India develop good products now that it couldn't develop 5 or 6 years ago? It is partly because the entrepreneurship, the advanced technology startups is becoming a global phenomenon. It doesn't really matter. That's maybe one of the benefits of the cloud is that you can be in Shanghai, or you can be in Bangalore, or you can be in anywhere else. You can be in Bangkok, and you can still start a global company because the distribution has been really enabled by the cloud infrastructure. So they started with that. When we funded, they were doing about $1 million in revenue, and today they are doing more than $10 million each quarter. So what you have to do is have a great product, sort of a work on that, iterating on that product till you believe it can be used by a broad group of people, and then you spend the money on marketing and really expanding. One thing I see that really worries me a little bit is that the companies are spending too much money on marketing too early on before the product is really in a form that a lot of people can use it. And that money often goes to waste.
Now, what is your perspective about these global companies being started in various different places? India is just one of them. We are seeing companies coming out of Europe and Asia and so forth. And then there is a kind of, I don't know, tendency, but it's a practice of them moving headquarters to Silicon Valley or somewhere in the US at least. What is your feeling about that? Is that something you require your companies to do? What's your analysis?
So yeah, right now in the last few years, that has worked out well for companies. But my belief in the long term, if I were to fast forward 5 years, that is going to be completely unnecessary. I think your headquarters will be in the cloud, up there somewhere in the sky. So you don't, physical headquarters are going to become really a thing of the past, in my opinion. Now, why do we move the headquarters to Silicon Valley? The main reason is culture. The main reason is the cultural learning from here is absolutely remarkable. The good thing about Silicon Valley is not so much technology or even expertise. It is a state of mind. Every company I run into believes that they're going to conquer the world. And that kind of a thinking is very, very hard to bring into Bangalore or Bangkok or, other places.
At this point, it hasn't gotten to that level yet.
It hasn't gotten to that level yet, but I believe that every company should have its headquarters in the cloud. You are everywhere. You are where the customer wants you to be. And I think
you run a completely virtual company, so absolutely agreed. But I think some of what I'm hearing from a lot of people who are making that choice is also talent. The talent to scale a company, the talent to, a really experienced VP of sales or a really experienced VP of marketing who has done this before is not as easy to find elsewhere in the world.
And that's absolutely right, Shraman. I think you're absolutely right. Is one of the biggest issues is depth of talent. Now, if you look at how the talent has come about in India or even in Europe, Israel to some extent as well, they have been studying it for a long time, is that the technology talent is there everywhere. The talent about building companies, marketing and sales and other aspects of what it takes to build a company, the depth of the talent is not there at other places. And my point is, Shramana, is that yes, I think you would need to, for a long time, for a certain number of years, you will need to be in the valley so you can build a sales and marketing organization. But the organization can still be in the cloud. You will have distributed workforce, but have sales and marketing based here, development based in Bangalore, and really a service organization, a way to support your customers everywhere. So I absolutely agree with you. The depth of Silicon Valley is really unparalleled in terms of depth of talent, and that's part of the reason to have your sales and marketing operation here. And really, for us, even in the short term, having the CEO move here, because they learn a lot from the marketing and sales and other expertise as well. But the state of mind is very, very difficult to copy, very, very difficult to replicate.
Well, and also the other thing that people are finding harder to access is actually capital. People can get the early stages of capital in some of the parts of the world. So India actually now has a little bit of an early stage capital ecosystem. There is a bit of that in Europe. There's a bit of that just starting to develop in Latin America, for example. Latin America is still way behind, but it's just starting to develop. And then when it comes to accessing the next round of funding, that's where things start to get a bit murky. And if you look at what's going on, this whole accelerator business, people are putting in, $30,000, $50,000 in all sorts of things, and some of it is rubbish. And then obviously they don't raise the next round of financing, and they think that that's a capital gap. It's a Series A crunch. It's not a Series A crunch. You're funding things that shouldn't be funded.
I think we as investors have a responsibility to make sure that what we are funding is in fact viable. Because the issue is that if I write a check for $50,000 or $100,000 or even $1 million, okay, if things don't work out, I lose my money. But the entrepreneurs, lose 2 years of their life.
Yeah.
And that is something we as investors, that responsibility we have to take very seriously. I can maybe get my $1 million back in some other investment, but the entrepreneur can't get his 2 years of his life back. And I think the whole idea that you bring in a bunch of people, give them $50,000, some survive and most die, is I think a bit of an irresponsible model, I would say. Even though my friends are, my best friends are running these incubators. So I think we have an obligation to make sure about that. And I think the point you raised earlier about raising future rounds of financing, I think, India 5 years ago, 6 years ago, there really was no capital for product-oriented startups. Part of the reason we have product-oriented startups right now in India is that there is capital available, but also the fact that Google and Facebook and everybody has a, advanced development center in India from which people decide to leave those companies and start, product-oriented startups. So the question really is future rounds of financing. And I'll say that there's a more awareness among late-stage funders, PE firms, that the whole entrepreneurship phenomena is global in nature. And I get a call maybe every week, every few days from some US fund who wants to invest in India and later-stage companies. I think the people who can see in the future, they are aggressively investing into India. But the local capital to invest in later stages is not there in India to the extent it should be. And I think the situation is actually worse, in South America, in Latin America, and Europe in many cases.
No, it's not there. Absolutely.
Yeah.
We hear from entrepreneurs from all of those places because we operate with a global footprint. Actually, in some ways, India is doing better. Well, Latin America is behind because Latin America hasn't had the technology outsourcing industry, which is where the Indian technology product industry is coming from. That's where they develop their skills.
Yeah.
But Latin America hasn't had that industry, so they're kind of starting from scratch. And now there's nearshoring and all that going on, so technology talent is getting groomed in Latin America, but it's a very different market than the heavily technology savvy Indian market. And Europe is also not a heavily technology savvy market. It doesn't have the level of technology trained pools of people. But there are some interesting pockets developing. Portugal, Lisbon has become an interesting pocket. And there are companies also starting to find a global footprint from there. So we are seeing some of that. Question for you, Naren, what is your investment thesis? What are you looking for? So give some pointers to the entrepreneurs listening to this. A lot of people are listening here. A lot of people will be listening to the recording. We've had in the last 4 sessions where we've had investors come and participate, they've provided at least some directional guidance on what kinds of things are exciting to you right now.
So, I think, if I were to say what is the most exciting thing I want to fund, and I say half jokingly that I want to fund companies, people, I want to fund people, let's say, who are coming up with concepts for which there is no market today. Because my belief is greatest companies create markets, whether it is Facebook or Google or whatever it might be. So I would say don't be the 10th company in the space. Try to think, in sort of original terms, and think big. So what we are looking for is people who are thinking creatively, who are thinking in non-linear ways. Not an extension of what Marketo is doing or what Facebook is doing or whatever, but really in new directions. And people who are good listeners. I think we tend to try to be good listeners ourselves, but I think people who are adaptive, who can change plans, because all the successes I've had, maybe 10 or so companies which have that I invested in that have gone public or had multi-$100 million exits. In every case, we hit a spot somewhere along the way where things look very tough, and the great entrepreneurs made something happen out of those situations. So it's not, we don't have a top-down philosophy in investing. We have a sort of a bottoms-up philosophy. We talk to every entrepreneur afresh. See what their thinking is. Are they going to be able to build a large company out of it? And one thing I do want to say is we want to fund entrepreneurs. At least one of the entrepreneurs among the team should be a good CEO, at least for the next few years. We don't want to fire entrepreneurs and bring CEOs. Those things just never really work out, in my opinion. So I think I want entrepreneurs who are thinking big, who are really willing to take on the leadership role. One thing maybe I'll say also, which maybe has been proven statistically, is that a team of 2 or 3 founders really makes a good team. If you look at all the big successes in the US and even in India, most of the time there were 2 founders or 3 founders, not 1 or not 4. It's kind of a strange thing that, because one of the problems we have as founders is that we tend to be aggressive and we tend to sort of believe we can walk through walls, and there needs to be somebody around you who kind of brings you back to earth once in a while. So I would say, bring somebody with you, bring somebody who's complementary to you, and somebody you love and respect, so you're going to listen to them when things are not going right or even when things are going right. So it's kind of a very intangible thing. And I'll say something more, Shimana, that if I go back and we do a lot of analysis on what we invested in, how they worked out and so on, that in most cases, in the first 15 minutes that you want to fund somebody. And all this whole thing about diligence and all that, I feel that is just really covering your behind. You know in your heart that this is the person you want to fund. When we met Didi, for example, I met him for breakfast. At the end of the breakfast, I told him that we will write you a check. Of course, assuming that everything you told us is true. Yeah. But we will write you a check. I think we need to be able to go with our guts. We need to think, sort of a non-linearly. And there's no real form. And be yourself. When you're talking to an investor, be yourself. You don't have to be like somebody else. Just be yourself.
I think that's applicable on the entrepreneur side also. I think we kind of know whom we want to work with as well, because chemistry is a human phenomenon, and to be with somebody is a bit like a marriage, right? You have to be with this group of people, whether it's a co-founder or a set of investors. You have to spend a lot of time, you have to build a lot of trust for many, many years. It takes 7, 10, sometimes more number of years to build a substantial company. And to be in that relationship for that long a time, you really need solid chemistry. And you can't feel like, there are, I'm not going to name any names, but there are investors in the industry who have reputations of backstabbing entrepreneurs. I'm not going to touch those investors with a 10-foot pole, right? So, when you make choices, don't make choices by thinking that this is the biggest name in the industry and I have to work with this person. You have to feel good with this person. You have to also kind of feel a bit safe with that person.
Right. The way I put it is that you can't divorce your investor.
No.
Yeah, they're stuck with you. You can't get rid of them that easily. They might be able to get rid of you, but you can't get rid of them. So be careful. Be careful with what you are doing, because there is no divorce.
And Naren, in terms of geography, your model is, are you investing in all kinds of companies, global companies? I know there's an emphasis on India, so could you just explain that for people who maybe want to approach you?
Yeah, we are focused on India because we believe there is a huge opportunity there. But we are also funding companies in the US, and my thesis, this is, certainly is that a lot of the great companies are going to be built to address the global market. So the kind of companies we fund in the US, Cloud.com, when we funded that, for example, when we sold the company, the three of the largest customers, actually the three largest customers were all outside the US. So I believe we want to fund companies in India that can address the Indian market or emerging markets as well as global markets, and we want to fund companies in the US that that have a plan to address global markets. And one thing I would say to all companies is that don't ignore the global markets. Today, you are not going to be able to build a big company without addressing the global markets because the growth outside the US is huge, and they need technology more than we do. So that's kind of our thesis. We don't generally want to fund companies where the market is exclusively or primarily the US.
Okay, great. So we are going to start the pitches, and Naren, you're going to stay for at least one of the pitches, you said?
Yes, I'm going to stay for the pitches, and I want to thank you, Shimana, for really asking very penetrating questions. I hope I have been helpful for the entrepreneurs. But also I would say one more thing about the thing is that when you are looking to this thing, make sure your funder is going to be accessible. If somebody sets up a meeting with you in 3 weeks, I think you should just fire that investor. How can you run a company? 3 weeks is a lifetime in your company, and if they can't really even meet with you in 3 weeks, for 3 weeks, there are exceptions. They might be on vacation or traveling, but I would say access is very, very, very important for entrepreneurs.